All right. So we talked about customer payments, right? Now this is going to be a continuation because there's one more last section we need to do before we can go ahead and record our deposits. Okay? And that is what happens when a customer, right, we give them terms and they decide to pay and get a discount. Well, that's just as easy too, right? It's the same process except here's the slight difference. Okay? So our example here is, right, if you remember in the first half of class, we actually created a bill for Mr. Bob Mason, right? And we remember that when we did that, we actually gave Mr. Bob Mason a discount. We gave him terms, right? He can receive a 2% discount, okay, if he pays within X amount of days. Now, in this case, right, I have the two bills here. And let's say he did send me a check, right? And let's see. He did send us a check, and it was on the January 31st. Okay, January 31st. Okay, of 2021, and he actually sent us a check in the amount of $151.45. Now let's take a look. Are any of those bills in regards to or remotely anywhere near that? Okay, and again, check number 5912. Okay, so in this case, which bill is he actually paying? Now, most cases, if a person is underpaying and they have multiple invoices, you normally would just apply it to the most oldest invoice, okay? Usually, because they still have time to pay for the newer ones, which have extended due dates. That's just rule of thumb there. But in this case, he's not paying us an underpayment. He's paying us the discounted amount. Now, again, we gave him a 2% discount off of this one right here. So let's take a look. Invoice number 2021-106. It says here that he owes me $154.54, and he gets a discount due date if he pays before February 6th. So in this case, I want to apply it to not that invoice, but this invoice. But still, it still shows that he is underpaying. So how do we record the discount? Because as I can see here, right, the due date, if he's paying on January 31st, he should deserve that 2% discount. So what you're going to do is it's only at the top of this window. When you're in your customer's payment window, you're going to go all the way up at the top, and at the very top you have discounts and add credits. Okay? You're going to click on that, and you're going to get this window. You have to apply the discount. It's not going to tell you automatically or calculate it for you automatically. Or in this case, when you receive the customer payments, it's not going to show up and be calculated already. You do have to apply it, and then it will calculate and show up afterwards. Okay? So here, all the information saying, okay, Bob Mason, all right, so this invoice that you just created, he's paying as of the 31st. So therefore, yes, he should get that $3.09, which is the 2% discount. Okay, and amount discounted is $309. Perfect. Discount account is going to be sales discount because this time this is a sales discount. Okay. Sales discount. And then what is the discount code? Since the sale was in San Jose, that means this discount is also going to happen in San Jose. All right. Once we actually fill out this information and we say, yes, let's go ahead and apply this discount, right? We say done. All of a sudden, now the invoice amount is going to be applied, the discount for the $309 to give you exactly $151.45, which is exactly what he paid. So therefore, that underpayment right here, it just ends up disappearing. Okay, and then we verified that it's this invoice. So again, if you want to type in your memo, you can. But in this case, it's been calculated that this invoice for the original for $154 received the discount. So the discount due date is now the 31st. He received his 309 discount. So now we can verify that we can save and close. Okay. And that is how you apply discounts. It's at the top of the window of the customer payment, and that's the only place you can be able to find it, okay? You wouldn't be able to find it like in here, like if you go to customers, you can't just apply a discount. No, it's only upon if the customer pays, right? It terms as a condition. Okay? Now, of course, with that being said, like, let's go ahead and take a look at that invoice once again because they paid it, right? So let's go to Bob Mason. Okay, let's view. Okay, so right here, we received a payment, okay, right there. Check number 5112, okay? So let's take a look at that invoice one more time. So if I pull up my invoice, what you're going to see is you're going to see that it's been paid, which is correct, right? And notice this, they actually tag you right here saying, well, this is the amount that was due, right? And so on and so forth. And because he met the discount due date, it's been paid with the full amount. So that means this person does not owe us for this. And right here on the corner on the far right side allows you to see the discount that was applied. So saying, well, he made a payment on the 31st, so therefore that's why he received the 2% discount, which made it a total of $151 to opposed to $154. Okay. Excuse me. So once again, that's how QuickBooks can keep track of everything for you, and that is it. That's how you apply customer discounts. Okay. So one of them, I showed you a discount that you do in store, or for example, if you have specific products that are on sale, you can apply a discount item. And in this case, with terms, because it's a condition, if the person does pay within the discount period, then you apply the discount that way. All right. So I showed you two different ways to apply a discount, right? One for store-wide purposes, and two for if you give terms. Okay. So now let's notice this, that now my record deposits is now up to 5 things, and that's the next thing that we're going to take a look at. So if I go ahead and click record deposits, right? So now it's the end of the day. I'm ready to record my deposits. Okay. And then you're going to get 2 windows. So this one is your record deposits, and then this one is where you're going to be selecting all the stuff that you have that you need to record. Now, rule of thumb here is you always want to record your checks and your cash together, okay? Anything that is a credit card, electronic funds transfer, any of those other types of forms of payment must be done separately, okay? And there's a reason why. Cash and checks, right? When you deposit the money into your bank, right, it's straightforward. It goes in exactly how much you counted. It's going to be exactly the way it goes in, because cash, you can't charge your customers extra money because they decided to pay with you in cash, right? Where in this case, right, credit card companies, right, here's something that you don't know, that you may not know. If you are the merchant, merchants have to pay these large credit card companies a certain percentage of their sales in order to use their services. Okay? So if you ever talk to an independent contractor, they're most likely going to tell you, hey, can you pay me not using a credit card company because the credit card company is going to take a certain percentage of my sales. Okay? They're more likely to tell you, I prefer cash. If you can Zelle me or electronically funds transfer me directly to my bank account, then that's it. But if you end up using a credit card, I do have to charge you a service fee, right? A convenience charge, right? That's because they don't tell you that they have to pay those large credit card companies to use their services, because what they do for you is they collect the money for you. And then they take the responsibility to have the customer pay them, right? So that's the idea here, all right? So that's the rule of why we must, deposit our checks in cash first, and then anything after that is going to be after that. So any other forms of payment is going to be after that. Now here you can view all of them. Now in this case, if you are running your business and you have multiple receiving payments, okay? Obviously this list can go on and on and on and on. But here's the cool thing about this is that it allows you to filter your items accordingly, right? You can choose to view all types. You could choose to view only cash and check only, American Express, MasterCard, Visa, whatever it is, right? You have all the information here, okay? Or all the different types of payments that you can receive. So in this case, I can choose cash and check, which I noticed because in this case, I received a total of 3, right? I should have received one from... Okay, and then if I go and do all, right, that means that's going to make me view all of it. So here I have 2 Visa payments, okay, so for Cruz Maria. I didn't put him as a check. Okay, my bad. I have to go change that. So let me go back and fix that real quick. So, yeah, so for any reasons that you accidentally make a mistake, you can just go back to the customer center. Or in this case, you could click receive payment since Bob Mason was the last person that you received a payment for. And here, I forgot to check that he's actually he wrote a check. Okay, that's completely fine. And then I'll be able to save and close. And then, okay, well, you made changes. Yes. Okay. Well, obviously your deposits won't change. However, when you go back to it, now I actually have 3 checks, 1 cash, and 1 Visa payment. That should be the correct one. Okay. Now in this case, right, if you don't need to necessarily filter your items based on that, you could filter by person as well. Okay. Or you could do by payment method. Okay, you could do by person, but in this case, right, we only have 5 transactions. We know exactly what we're gonna do. I'm gonna highlight everything except for the Visa payment because this one I need to add a service charge. So for these ones, rule of thumb is always do your cash and your checks together, and then you do your Visa electronic funds transfer completely separate. Okay. So then I'm going to go ahead and click OK. Now there you go. I've added all of my customer deposits here. And I believe in the book, it also tells you, hey, since you're going to make a deposit of cash and checks here, might as well also throw in a owner's contribution, right? Because I'm making a deposit, might as well add some extra money into the pot, right? Because these were money that I received from sales, okay? And in this case, I want to also include adding money from my bank account, from my personal, like cash that I have laying around, my original investment. I'm going to go ahead and dump extra money in here. So in this case, from what account are we associating this? So as you can see, undeposited funds. In this case, this is a owner's contribution. Okay, owner's contribution. Okay, all right. Of course, that means the owner, Mr. Whoever, Vern Black, decides to say, hey, I'm going to go ahead and deposit extra money in here, okay, so I can, say that I have more money or bring my equity up to value, okay? So in this case, we're going to add owner's contribution, check number 13451 for a total of $15,000. And again, we're going to be depositing a check because no one in the world is going to have $15,000 in their pocket. $15,000. Again, once again, this isn't an associated linkage to anybody. Okay, so it's not to San Jose or anybody else. So in this case, right there, put the amount in, and it's going to calculate at the bottom that I'm going to be depositing a total of $16,000. Okay. Now, of course, since we're looking at deposits for the first time, we're also looking at, so that's how we enter in a deposit. So if you don't have, if you didn't receive any payments, but you're trying to put in other stuff in here, so maybe your own investment, right? You're going to have to do it this way. Now, as far as taking money out, you can obviously write yourself a check. That is possible. So you can spend the money that's in your checking account. Okay, that's one way to doing it. Or second way is you can also have the option to have cash back. Okay, now of course, cash back is mainly used for two things, right? If you don't have a petty cash system set up, well, maybe you have a cash register. You need cash to be in the cash register for you to be able to use it, right? So the same situation here too. Well, if you have a petty cash, then go ahead and put it in there. But in this case, you have to have the account available, okay? And this is where we say, well, what is a petty cash? Well, a petty cash is something that you have a special lockbox full of cash that you use for minor business expenses. So a great example would be if the office likes to print out a lot of paper, and at the end of the day, you use the last ream of paper, and it takes 3 to 5 days to order stock more paper, and you need to print now because it's only lunchtime. Then you're gonna take the money in the cash box, go to the local office depot store or whatever, pick up a few reams of printer paper, and that is a minor business expense. You're not pocketing this out on your own. You're using the company's money to pay for it, okay? And that's what a petty cash drawer is. So unfortunately, in this case, I don't have a petty cash drawer. You do need to set this account up prior before using this section here. But of course, as we all know, you can create the account right then and there. So if you don't have a petty cash fund, go ahead and create a petty cash fund. Okay, but in this case, I don't use a petty cash, so there's no necessarily needs to it. So in this case, again, you choose the account that you want to put money into, and you either do cashback memo, so you could say, why did you take this money out? You just say for petty cash, and again, cashback amount. So how much are you actually going to put in there? Okay. So pretty straightforward. So if you have a cash register, this would be a perfect example, right? You put your cash register. It's considered a bank account because, once again, that's your means of being able to exchange with your customers for the right money. And in this case, you're also able to do that, right? Why is it that we're able to receive cash, but we don't have a cash register? Okay. So, again, you would just create your cash register account, make your note here, and then put in whatever amount that there is. Okay. And of course, since I'm not going to do that, I verify that this is the total amount that I have, and I'm going to go ahead and click deposit. And there it goes. Now it's telling me I still have one more deposit left to go. But check this out. I'm going to go into my checking account. Okay, make sure it says checking. Click OK. And what you're going to notice is that I deposited money on the 31st. Okay, for the $16,146. So now my total amount in my bank account is now $27,708. So again, notice this, again, it labels each transaction that you have. So again, this is like a ledger account, okay? A register is like a ledger account. It tells you that this was a bill payment, this was a check that you wrote, this is a deposit you made, this was a bill payment you made, okay? It does it for you in a nice manner way, and it gives you like a kind of a code so you know what the transaction was at hand. Okay? So in this case, I deposited $16,000, and it even says right here in the notes too, it was a deposit. Okay? So that's what happens there. Okay? So the last thing I'm going to show you is, well, what happens if I need to deposit my last transaction, which is a Visa credit card. Okay? And I'm going to click OK. Now, depending on what agreements you've made, so of course, if it's below a certain amount, they don't charge you based on percentage. They charge you as a flat rate. There's a bunch of agreements that you have to do as a merchant allowing credit cards to be used for a form of payment. Okay? In this case, with credit cards, depending on which credit card company you go for, so someone like American Express, obviously it's harder to use, or it's harder to get approved with credit with them. It's also very hard to actually obtain as well. Where the most common credit card companies we see out there is normally Visa and MasterCard, okay? Because they're widely used and widely accepted. So in this case, as a merchant, right, we need to understand that they are going to charge us a total of 2% for borrowing, for allowing them to utilize, they charge us, the company, 2% of our sales because we wanted them to provide services for us. Now, again, let's take a look. Maria Cruz owed us almost $2,000. Now, as a normal person who doesn't have a credit card, you can expect, is it possible that they would give you the $2,000? That's where we have to also be subject. Like, do we trust this person or not? But in this case, right? So that's why oftentimes major corporations would pay that price to sacrifice a small percentage of their sales to guarantee the payment comes through. Because a credit card payment, right, is instant. If they can charge it and the money goes through to your bank account immediately. Okay? And that's the thing about businesses and making that agreement is that something that you can do? And in this case, yes. All right. So again, Maria Cruz is the Visa payment for the 1950. Okay. We're going to do some quick math. Okay. So quick math is something that is going to be a feature that you can do in QuickBooks to do some simple math. Now, in this case, right, since I mentioned that since credit cards actually go straight to your bank account, because you made this agreement, the bank is going to already take that amount out from your checking account automatically. They're not going to let you know that, because you agreed that you're going to use Visa to pay for it, right? Or have them accept Visa. You need to pay this amount because that's the agreement terms. So in this case, what we're going to do is we're going to do quick math, okay? I'm going to create another line item in here, and this time this is going to be for bank card service charges, okay? And of course, this is how we use the quick math. Now, in this case, if you have multiple credit cards lined up, your best bet to look at the number down below where it says your total amount deposited, okay? In this case, I only have one, so it's easy. I could see right here that I need to do a percentage off of the 1950 because that was the total sales, right? So I go ahead and type in 1950, and then in order to activate quick math, you're going to be using any of the symbols, plus sign, minus sign, division, or multiplication. In this case, I have to put a multiplication. And there you go. It starts activating your quick math, which is the little accountant's receipt, if you ever seen that. So it allows you to here to go ahead and enter and complete your quick math. So in this case, right, I'm looking that this company wants to take 2% of my sales. And let me double check that. They want to take 2% of my sales. Okay? And again, this is a merchant Oh, did I put bank? I put bank card services, right? Oh no, it's a merchant. Okay? So there you go. So I put 0.2%. Now, watch this, okay? If I go ahead and click tab, okay, to validate that this is my transaction, or I can do enter for this one. Now it tells me that I'm going to be increasing my deposit by $39. That's not what I want. So in this case, when you start calculating bank service charges, you actually need to remember that it is not going to be just regular 2%. It's going to actually be negative 0.2%. Okay? And that will give me a negative $39. And then if you take a look at your total amount deposited, it's going to be for $19.11 instead of opposed to $19.50 because you are subject to these. Now again, this account isn't bank card services. Again, sorry, I confused this book once again. They renamed it to merchant service fees. Okay. All right. And of course, it's up to you if you want to make an association of what class it belongs to. In this case, they say Walnut Creek, but it's up to you if you want to put Walnut Creek. Okay. Because Maria Cruz is for the Walnut Creek. And there you go. And once you figure that out, right, that means you're only depositing $19.11 because you're automatically going to get charged this service fee for the $39. Okay. And I'm going to go ahead and click Save and Close. So once again, now that I've figured that amount out, obviously the account service fee, bank service fees is an expense account. So here it shows you that yes, you deposited money. However, it was split because not all of the money went through. It was only $19.11 that went through. Okay. Any questions in regards to customer deposits?
No, not for me.
Okay. Now here's a technique that you could save some extra time. So for example, instead of going to the bank and having to stand there and fill out a deposit slip, because sometimes they do that. Sometimes they just take your information and do it for you. You can actually print out a deposit slip so then you can just bring it to the bank and they just do everything for you. You go to banking, okay? You're going to go to make deposits. Okay, so make deposits. Right? So in this window, and at the very top, you have the option to print. Okay, and it gives you the option to print the deposit slip, or it asks you to do a deposit summary. In this case, you don't need a deposit summary. I was talking about more so for the deposit slip itself. Okay, so again, that will only save you not even that much time, because every time you go to the bank, you give your information anyway. So they're just gonna type it up and create the deposit slip for you. Now this printing deposit slip is only so then, it keeps you have a track record of what deposits you made. But at the end of the day, as we saw, you go into the check register, it already recorded and verified, that you made a deposit. So in this case, printing out a deposit slip is not necessary because the bank that you go to should already do that for you. Okay, but I do want to show you to make sure that you know exactly how to do it. So again, any bank deposits that you do make and you want to print them out, you can do it this way. Okay, so just go to the make deposits window, okay, and you can print it out. Now, of course, that's only if, let's say, I go back to this one, right, my previous one. Okay, so this one would be best for this one because I made a deposit slip. Okay, so I can print out a deposit slip for this one to verify that I made a deposit of 5 things, right? 1 cash transaction, 3 checks, and then 1 owner's contribution. All right, so that's it here. Okay. And then last but not least, we're going to talk about reports. Again, I'm not going to go over into detail what these reports are because, again, you could go to customers and receivables, right, under reports, and these are the reports that you can do. You could run a report on customer balance information, again, open invoices, looking at average days of pay summary. So again, how often do you receive payments from your customers? Okay, and other things like that, and transaction list by customers. Okay. Again, you can even do sales reports too, where in this case, I believe we do have some sales reports, right? You can run some sales reports based on what kind of products you sell, right? So you could do a sales report by item summary right here. I could see which items are actually more popular. So in this case, okay, it's not the summary. I need the detailed. Okay, so reports, sales, sales by item detail. Okay, and this is where I can pull all my information. It says right here. Okay, for the cameras, this is how many my sales go for. I only sold 4 this month or this year. Okay, in this case, it's all transactions. So I only sold a total of 4 cameras. I sold a total of this many items here. I sold my picture frames. I only sold 3 picture frames. Okay. I sold a total of 10 lenses. Okay. No, in this case, total Okay. So basically, it gives you pretty much a map of what items are that you sell more frequently, etc., etc. Okay. So again, that's sales reform. Okay. Wait, cancel. That's just the sales form. And that's it. Okay. Again, anything that has to do if you're in the position of the sales representative or the in charge of accounts receivable, those reports are just going to answer the question that you need to answer. Okay. Any questions in regards to chapter 2?
No.
No.
All right. Let's go over the chapter review questions.
Actually, I do have a quick question.
Go for it.
Okay, so when I was doing my deposits, somehow I didn't register them as checks. And so I was trying to do that, but then somehow I got through the process of depositing. So how can I go back and redo that section? Do I have to reload the problem?
In this case, you can. So then you start out fresh. So the great thing about portable files is you're able to open and create a new file to start over and practice over and over again. But in this case, right, yes, you can actually undo a deposit. Okay, if you go to your previous one, right, you have the button that says revert. So in this case, you can actually undo a deposit if that's not necessary. But all of these things right here, if you didn't make a reference, whether they're cash, check, or whatever it is, that's a simple and easy fix. You can just simply go to your customer center, right? Locate those people. So again, we worked with Bob Mason, right? And here's my payment. I can double click on his payment, and here I can toggle, I can change what kind of form of payment he has. So in this case, that way you make an association of who paid with what. Okay. If you didn't have that section filtered out that way. Okay. So again, all this stuff you can actually modify. So if you actually remember earlier, I had him as a Visa. I went back to his profile, picked his customer payment, and I switched him to a check. And then it made my deposits all nice and sound. Okay? But in this case, like if you were to do that, you can always revert or undo the transaction, which once again, you want to be careful with that because sometimes if you're not a very strong person in accounting or QuickBooks, you may run into extra problems because you might do something that might that you might not be able to fix. Okay, so in this case, you can go to your make deposits, right? And you can go back to that transaction by going to previous, and then going ahead and reverting it. That will undo it. Okay.
Oh, okay. Thank you.
Any other questions? All right, so let's get started with the review questions. Okay, so again, these are, questions to think about when you're studying. Okay, but I want to make sure we go over the multiple choice questions. So here's the instructions. Select the best answer for each of the following. Okay, number 1. Okay, in the new customers window, you find everything except D is correct. Year to date sales information. Yes, right? That's not even having to deal with each customer. Okay? That's a sales question. Number 2, you should record a sales receipt when the customer pays. A is correct, right? Buy cash, check, buy cash, check, credit card at time of service or time of sale. Okay. Number 3, okay, which statement is false? So that means there's 3 truths and one of them is false.
I got B.
B, okay. Invoices decrease accounts receivable. Yes, that is false because it actually increases, right? Invoices just tells you that your customer is owing you money. So therefore, when you know what an accounts receivable is, when you allow your customers to owe you money, you're increasing it, not decreasing it. Okay. Good. Number 4, you may specify payment terms on the new customer window. However,
I got D.
D is correct. You are also permitted to override the terms on each sale. So yes, for any reason you decide to make changes, maybe they bought too less stuff. If they bought too less stuff, what's the point of giving them a discount? It makes no sense, right? But if they buy a bunch of stuff, then yes, you definitely want to put terms on there. So yes, you can override that anytime. You're not obligated to have have each customer have a specific term. No. If you're standard, then you make them all standard. But if you feel like you want to give them a discount, you can always make changes there. Okay, on the actual sales form itself. Number 5, okay, your company has just accepted a payment for an invoice. What should you do in QuickBooks to record this payment?
D.
D, you receive the payment by clicking Receive Payments. Yes. Yes. Right? There's no other way you can receive a payment without clicking Receive Payments. I don't know how to explain that, but again, you don't click Open Invoice by checking the invoices, right? No, that's not receiving a payment. You don't create a sales receipt because, you don't create a sales receipt because that's when a customer pays at time of service. if you use a sales receipt to make a payment for an invoice, what you're essentially doing is you're doubling up the sales, right? And what you're doing is you're making no relationship between the invoice and receiving an actual payment. So that's why if you look at the flow of transactions, sales receipts is on its complete own. And once you receive money, it goes straight to the deposits. Whereas when you look at create invoices, it goes straight to receive payments. So again, never use sales receipts to use it as a receive payment. Okay. All right, number 6. Number 6 says, okay, which statement is false? So C is correct, okay? The PO number is required on all invoices. No, not everybody is going to order from you, okay? Some people can walk into the store and be like, I want to buy this. Did they make a pre-notion that they wanted to buy that? No. Okay, so in this case, C is correct. Okay. Number 7, to record a deposit in QuickBooks.
D.
D
as in David.
D as in David, all of the above is correct. So you would make a separate deposit for that includes both checks and cash. Good, that's what I showed you. You would make a separate deposit that includes both Visa and MasterCard. Yes. Letter C says make sure that each deposit total matches the bank feed or bank statement. Yes. Okay. In this case, yes. I didn't talk about that, but yes. D, all of the above is correct. Okay. Number 8. Okay. So your company has just received an order from a customer, okay, who will pay within 30 days, okay? How should you record this transaction in QuickBooks? A, right? Create an invoice, right? Because here they're not going to pay you now, they pay you afterwards. So in this case, A is correct, right? Number 9, when you make a deposit, all of the following are true except
A.
Number 9, A is correct, that you must print a deposit slip in order to process a deposit. No. QuickBooks, again, you could print out a deposit slip, but that only saves you time to go to the bank. But at the end of the day, the bank prints you a deposit slip for every transaction you do. So at the end of the day, you don't need to print one. And, okay. Number 10. Which statement is true in regards to calculating items?
That is B.
B. Let's see. B as in boy. A calculating item always calculates the amount of all line items above.
Just the one.
It's just one. So which one's that one?
D.
D is the correct answer. Yes, it only calculates the item preceding that item. So again, you have to create, if you want to do all of it, you have to create a subtotal line, and then you'd be able to apply the discount item line. Okay. Number 11, okay, when creating a customer record, okay, which statement is false?
I think it's C.
C is correct. A sales rep must be selected when creating a new customer. In this case, it's only subjective, right? If your company has sales representative, if you want to have this person be in charge of their customers, if you want to segregate or separate or have commissions, then yes, it's not required, right? Again, so it's not actually required, so that statement is false. Number 12, okay? When receiving payments from customers to whom you have sent an invoice to, okay, you must do what?
C.
This is number 12. C is the correct answer. You must enter in the payment information to receive the payment window and then check off the appropriate invoices. Yes, yes, yes. Okay. Number 13. Okay. You need to calculate the amount of bank card fees by multiplying the amount that you received from the payments by -1%. What useful QuickBooks feature is this?
B. B.
B as in boy, quick math. Yes, okay. A, it's not called calculating items. That's you doing the line items, so no. Quick add, right? Quick add is when you want to add people, add items, add accounts, right? And then D is the fees button at the bottom. There is no such thing as a fees button. Okay. All right, number 14. Okay, the undeposited funds account tracks what?
B.
B
Yeah.
as in boy is correct, okay? Funds that have been received but not yet deposited, okay? So again, the idea of utilizing this is the same thing as in real life, right? If you receive a check, receive a cash, and it's going to be sitting in a box until you go and deposit it into your checking account yourself, okay? So same idea there. Last but not least, question number 15, okay? After entering an existing customer in the customer's job field, okay, of an invoice, okay, and if a customer is not found, okay, dialog box opens up and says that this customer is not on the customer list, okay, what should you do?
A.
In this case, let's see, let's visit A. You're going to click the quick add button to add the customer to the customer list. Now in this case, right, let's read the question one more time. After entering an existing customer, so the customer already exists,
Okay.
okay? But however, because you typed it in, all of a sudden you said, oh wait, I can't find this person. You definitely don't want to quick add because then you have multiple people in the same person into your list. So A, again, this constitute in reading things carefully. So A, a lot of times, a lot of students make this mistake too. So A is not the correct answer. What should it be?
I think it's
Is it B?
C.
C, to click cancel and then check the name that you entered into the customer job field for typos. Yes. So again, you can make a typo, and that's why it looks like it doesn't exist. But in reality, it's already an existing customer, so you want to be careful here. All right.
So, would it be true if it's a customer for A? Would it be true if it's a new customer?
Yes, correct. If it's a non-existent customer and you don't have them in your system, then yes, you would use the quick add feature to add them to the customer list. Yes. Okay, good job.
What was the answer to number 1 again? I didn't get that one.
Number 1. Actually, well, let me see. Number 1 is D.
D as in David?
D as in David. Year-to-date sales information. Yes.
All right.
Okay. So, any other questions in regards to chapter 2? Okay. All right. So, homework for tonight is just to read chapter 3. Once again, chapter 3 is going to be dealing with more customer things that you can do. So, we're going to look at how